All right, so we've talked about market structure, okay? We've talked about support resistance, trend lines, patterns. Already, you're a good Forex trader. I'm sure you are. But how do you know when the trend wants to change direction? How do you know when the market wants to stop being bullish and start getting bearish? How do you know that? Now, it's very important to know there are two things that will help you with that. There are actually two things that will help you with that. Okay, you need to understand the difference and meaning between shift in market structure and break in market structure. All right, these are the two major ways you know how market wants to change the trend, how market wants to change direction. Okay, these are the two major ways you're gonna know. Okay, so if you're looking at the screen right now, all right, if you're looking at the screen right now, let me show you how you can identify that. Okay, now take a look at the chart now. Okay, take a look at my screen. Let's say market is in a downtrend now, right? The market is making lower lows and lower highs. All right, the market is making lower lows and lower highs. Okay, now instead of making a lower low, instead of making a lower high, okay, to make another lower low. Now, a break in market structure is when instead of respecting that rule, you know, market just breaks the previous high. The previous high made is now invalidated. Okay, meaning it is no longer a lower low, lower high. It is now a lower low, then a higher high. Okay, meaning the higher high has broken the previous lower high. Okay, now that happens, and now it is now a break in market structure. Okay, now that's now a pure break in market structure. Okay, now you annotate a break in market structure by just drawing a line from the previous lower high straight out. Then you'll be able to see the break in market structure visibly. All right, now another thing to note is that break in market structure. Another thing to note is that it won't continue like that, definitely. Okay, it will go bearish for a moment. Now remember, this is changing from a bearish market to a bullish market directly. Okay, now when market has broken structure, okay, the market will then continue downwards a little bit like this, then starts making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Simple. This here, my friend, is called a break in market structure. All right, this is a break in market structure. Yeah, so you can just take a screenshot of this, although the image we made available for you. This is a break in market structure. This is how the trend changes. Same way a bullish market, a bearish market will change to a bullish market. Same way a bullish market will change into a bearish market. Once structure is broken, that is it. Okay, it is now entering the opposite direction. All right, now that's how you know a break in market structure. Now, what about a shift in market structure? There's a difference. Now, listen very carefully now. A shift in market structure will happen like this. All right. Now remember, okay, this is, hold on. This is BMS. Now, this is now an SMS, a shift in market structure. All right. Now, watch this now. Okay, let's say market is in a downtrend. Okay, making, remember, lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. All right. Now, watch you. This is the difference. All right. This is how you differentiate between a BMS and an SMS. Market does not break structure. No, it shifts structure. That's the meaning of an SM. Shifts in market structure. It does not break market structure. It shifts market structure. Meaning, it won't break it. It won't make a higher high. Sorry, it won't make a lower high and it won't make a higher high. Meaning, it will just stay in between. Okay, meaning, market will just go from here, like this, and it will make a lower low, like this. And then start from there, it will start making a higher high, a higher low, a higher high, a higher low, a higher high, a higher low. What you've seen here, my friend, is a shift in market structure. It didn't break market structure, remember? It didn't break the previous high, and it didn't break the previous low. It just shifted. It just started making a trend right from where it is. That is the difference between a break in market structure and a shift in market structure. All right? Now, now how do you annotate a shift in market structure? You're just going to pick your trend line tool. Okay? You pick your trend line tool. You mark where it shifted. Okay? And that is the shift in market structure. This is the shift in market structure, and this is the break in market structure. All right? Let's see. All right. Putting them together so you can see the difference between a break and a shift in market structure. Now, it is very, very, very important to know the difference between these two. So when it happens on your chart, you won't actually be surprised. You will know what is actually going on. All right. Now this is the difference between a shift in market structure and a break in market structure. Let me show you how this actually look like on the charts. All right. Now let's talk about a shift in market structure. Let me show you where I saw it. You see, remember what I told you? Okay. Remember what I told you? Market was making lower lows, lower high, lower lows, lower high, lower lows, lower high, lower lows, lower high, okay? Lower lows, lower high, lower lows, okay? It didn't break the previous lower high, okay? It didn't break the previous lower high. That's mean they're now higher high. Then started making higher lows, higher highs, higher lows, higher highs, higher lows, all right? This is the shift in market structure I was talking about. All right, you can see it visibly. I saw this is how the trend changed from a bearish market to a bullish market. All right, this is how it changed from a bearish market to a bullish market. And now, what about a break in market structure? All right, see, if you see it, market was making, look at it right here, market was making a lower low, a lower high, a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then boom, it broke previous lower high. Okay, it broke previous lower high. Then started making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and so on and so forth. All right, so now you're gonna annotate it on your chart as a BMS. It's simple. Forex trading is not hard. With the key infos I'm actually giving you, all right, you are capable of trading the Forex market. But there's one more thing you need to know. There's one more key thing you need to know trading the Forex market. And that's called risk management.